Welcome back, friends. This is Long Trades here, and in this video we're going to be doing a trade review or a trade breakdown of every pair that I have my eyes on this week. Okay, so before we proceed, please do well to like, subscribe, and then share the videos to your friend, as more of this will be coming often. Alright, so we're going to start from the top on my watch list, which is AUD USD. And basically, if you've been following my videos, you know the way I take my setups, you know the way I take my trades. Basically, I do a top-down analysis from the weekly time frame, then step down, then I get my entry at the 1 hour. So that is exactly what we're going to replicate here. Okay, so on the weekly time frame on AUD USD, what I want to look out for is the market structure. What's the market doing? What's the order flow? Okay, is it an uptrend? Is it a downtrend? Is it a consolidating market? You get things like that. All right, so looking at this setup now, this immediate price, I have no interest to this. Okay, looking at this immediate price now, it's looking bullish slightly around here. Okay, so I would also want to check the DOL or the CRT, that's the draw liquidity or the candle range theory, in order to understand what last week's candle did and then what is this week's candle doing. Okay, so already market has opened and you opened with a gap. So that gap already now has propelled another liquidity zone or another space in between. All right, so the draw on liquidity here is basically this candle now was swept and there was nobody close around that zone. Okay, and eventually candles coming after it were looking bullish. The next candle was looking bullish and it didn't even come close below here. So if you observe very well, this week's candle just opened and this week's candle is becoming bullish. It's showing that there is a bullish movement this week. Okay, basically what we're going to look for is buys throughout this week. And if you look also, the candle is above the previous candle. That's the last sold candle. Okay, that's first thing, the confirmation that the market is on an uptrend. You get, so this is first of what I'm looking at now. I've observed and I've gotten my order flow, which is a bullish market structure. Now I would want to get down to the daily time frame in order to get the break of structures. That's the confluences that will enable me to take this particular trade. So getting down to the daily time frame, you can see, okay, on the daily now, this was the weekly key level that I marked out now. And then on the daily level, you can basically see a range here. This zone has been one big consolidation with almost 7 days. Okay, this range has been one big consolidation, and eventually the next candle, which is today's candle that just opened, is showing signs of breaking above. So if this particular candle closes above now, that means I'm targeting anything below here to be my entry. Okay, I'm targeting anything below to be my entry. Basically, I will actually look out for liquidity because of this range here. I'll look out for liquidity because of this whole range here. I wouldn't want to take an entry from the range or anything. So let's furthermore analyze and we'll see exactly what will happen in this particular trade, or exactly what we're looking at to happen in this particular trade. So to the 4-hour time frame now, so I can observe the key levels, the other blocks, fair value gaps, basically strong key levels the market is looking to fill before it moves. So on the 4-hour time frame, coming down now. Okay, sorry, I skipped something on the daily time frame. I skipped to observe the break of structures. So let me scroll back down. So on the daily time frame now, one thing is observable here, the uptrend movement. One thing is observable here, the uptrend movement, if you can see, this was up, down, and eventually there was a break here, then a continuation, a retest, continue. So within this zone now, there is this fair value gap here. There is this fair value gap within that zone, and there is also an inducement. And basically, market has filled in the fair value gap and filled in the inducement, but there is this other block here. Originally, I was supposed to take my entry from this morning star order block, which is this 2 candle. Originally, that's where I'm supposed to take my entry from, this morning star candle. But then because of this range and the candles here, I'm looking at the market come and sweep this whole zone. I'm telling you reasons now why I picked the other block I picked below. Because this range now and then this liquidity zone, I'm looking for markets. I'm looking at markets coming to sweep it, and then trigger the entry right below it before it moves. That's exactly why I left it. I left this particular entry, even if I had entered here, it would be too wide of a stop loss to risk anything on it. So more reasons why I should allow it a bit, let the market do its thing and probably come back down and then move. Basically getting a more refined entry. So let me bring down my other block back down to where it was. So yeah, I used to call this engineered liquidity. When the market creates a low, then moves a bit, so that when people enter the trade at that particular point, then when the market moves, they probably will set break even. You get break even is moving the stop loss to entry or something like that. So when people set break even and everything, the market basically comes and takes them out, sweeps everything, sweeps that particular low, and then move because that's taking liquidity and it's now move with a very good momentum. All right, so that's exactly why I did not take an entry from this particular fair value gap. Rather, I left it at that last candle. Okay, so on a 4-hour time frame now, basically it might show the same thing because obviously the market is fractal. So let's just look into the structure more. So if you see, this is exactly what we observed on the daily time frame. This was the candle, okay, and from here it was a range. So basically it is very susceptible to come back down into this zone before it continues. And then there were the next movements. So from here, basically a range, and then once there is a break of that range, okay, now it's now observed that yes, this market now is moving already. You get, it's going to buy. So eventually the next thing I'm going to do is wait. Once the market comes back down into this entry, into this key level, then I'll now take my entry to the upside. All right, so this is the first trade I have my eyes on for this week, and catching this position should be kind of a 10-hour trade, and it's going to be a swing trade. Actually, it's going to be a swing trade because this is a 4-hour time frame I'm taking my entry from, so it's going to be a long-term trade. Yeah, that's obviously a 10-hour trade. Nice setup though. So I'm patiently waiting for the market. Once it does its thing, then I'll do my thing. All right. So the second pair I have my interest on is Euro AUD. Now, one thing about this pair is I think I've explained this before. When there is a gap after the market has been inactive for quite some time, and then it opens, and then there is a gap. What they call it, liquidity void. I think I've explained it before. It's in one of my videos. All right. So the liquidity void is basically a space that is left in the market due to an inactivity in the market. You get weekends now, there are no traders in the market. So when the market opens, on Monday. You get, it leaves that space, it leaves that gap. That gap now creates a fair value gap or a liquidity zone, basically, where the market will come back to filling and continue. Alright, so this is the next pair, Euro AUD. And in Euro AUD, we'll do exactly the same thing we did for other things without going far. So just work with me as I analyze this particular pair, then we can proceed to the next. So in a 1 week, on a 1 week time frame, you can already see I've mapped out key levels that the market is probably going to mitigate, probably going to reach at. You get, so this high and the next high level the market is going to reach at, and obviously it's going to be a bullish trend. Okay, you can see the other flow, it's a bullish market structure. Then from here is the last low, then targeting that high. So to check the drawn liquidity or the CRT, the candle range theory, the current week now, and then the previous weeks are bearish rather, are bearish. Reason is it's looking to mitigate a key level below before it continues in its bullish movement. You get, observe now, it's a sell to buy. Okay, it's a sell to buy. After sweeping the liquidity above here, market is dropping. Once it comes back down to this key level, it continues and obviously continues in its bullish trend. Okay, so on daily, I want to be getting my break of structures. Just basically anything that will give me confidence is that yes, the market is going to play out this certain week or something like that. So I think this has been a range for quite some time. But the structure is looking quite nice, but it's been a range because there has been no current break of the previous high. Okay, so we're anticipating a break of the previous high very soon. Yeah, so this was the first entry, the engagement, the rally around, and then it tap into it in continuation. So as it stands now, what we're looking at is this move, waiting for this move on a 4-hour time frame. This is the break of structure, then the inducement. Basically, there are fair value gaps around here and it's been filled almost already. Okay, so what we're now looking at is this entry here, this entry here. That's for a swing trade. This is what we're looking at. Market coming back down to this place, testing and moving immediately. So that is the second pair now. And there was something I wanted to do here. No, don't worry. While we move, I would show us exactly what I'm looking at here. So this was my inducement, and this is my entry. Then eventually it moves. So on a 30 minutes time frame, I wanted to short the pair. Okay. So basically, we understand. If you understand counter trading, this might be familiar to you. If you understand counter trading, basically to trade against the trend at that particular time, you get to sell into another block. I think you get the point. So this is a particular entry I would get into, okay, before I take my buys. That's sell to buy entry. You get. So this was the last break of structure to the downside now. Then it continues break of structure. This particular break happened just recently because market just opened and then it left a gap, and obviously you can see what the gap is doing. The market is pushed down. All right, so from this point, from this first break and the second break, what I'm now targeting is one of the two. It's either the market takes an entry from the fair value gap, that's the 50% of the fair value gap. So that market takes an entry from here down, or it actually comes up to this zone, because this was an inducement, or this is an inducement here. Inducements are kind of liquidity. You get, market is actually seeking inducement. So unless the market comes and mitigates this particular entry here through this inducement, then a continuation to the downside, or it actually mitigates the fair value gap 50%, then continues to the downside. So these are the two things I'm actually looking at for short term on this particular trade before I take my entry on the 4 hours. That's the long term. So eventually, whichever one that happens, I already know that I'm going to sell this zone and then buy at that zone. You get. So this is exactly what I'm looking at on this particular pair, Euro AUD. So coming back to the 4 hour now. So we'll look at the structure now so we can see. Okay. So I think it's becoming clearer now. You can clearly observe everything that is going on this particular pair. I'm selling in order to buy. If you look into this zone now, this is a mild retest. Okay. So this is the summary of the particular trade. There are actually 4 more setups in order to get into in this particular trade, but if I do all of them on this particular video, it gets too long, so I'm going to cut it short. And then on the next video, I'm going to continue in the trade breakdowns in the weekly outlook. So thank you very much for watching. Do what to like, subscribe, and share to your friends in order to understand and learn about forex trading. Thank you, and see you in the next.